We're going to analyze price chart using price action rules to help us identify high probability setups. Because what's going to happen on the right side of the chart is directly correlated to what was happening on the left side of the chart, and for that reason we first need to identify the left side of the market. We can see that the downtrend was the significant pattern. We have a series of lower highs, lower lows, and this is a very strong downtrend to start the day with. There's a close outside for this downtrend, which you always need to identify the pattern. And according to trendline rules, we expect for this downtrend to create new extreme after there's a break. There was a break, close outside, market form a new extreme, and this low is lower than the lowest low inside of the channel prior to break. So that's what it means when we're talking about market creating new extreme. New low was made, and there are two scenarios that can happen according to rules. Correction phase can occur or possible reversal. If I'm going to zoom back and I can gauge the size of this downtrend, it is a very strong downtrend. So I already don't expect for prices to reverse. In fact, I expect correction or possibly even continuation of the downtrend, because this was a very strong downtrend to start the day with, a lot of small bars. So I expect for prices to develop a correction and possibly resumption of the trend. For that reason, once we have uptrend working higher, I'm not going to redraw uptrend wider like this, even though it fits nicely and it makes sense. Since I expect continuation of the downtrend, as I see the prices are mainly picking up steam at this point on, this is where I'm going to use the second swing, connect these few swings, and I already have a break in new extreme. And this makes sense. This is steeper with the break new extreme, and now I expect for prices to push below EMA and to resume the overall downtrend. I'm also going to look for a possible trading range, because if we're going to be in a correction, we may develop a trading range of some sort. We have a new high, first entry long, pullback, second entry long failure. And here we have a failed second entry long, which would be a high probability setup. But is this a high probability setup? Now this chart form a little bit different than when we would be trading the chart live. On this chart right here, you can see it didn't really touch the exponential moving average fully, and it also moved quite down. But at the time, we were much closer to EMA, but we also closed outside the channel. Now, according to price action rules, this is a failed second entry short, reversal pattern below EMA. So this is a high probability setup. For that reason, I'm going to mark it, because you only need a couple of nuances to help you stay away from this trade. I didn't take this trade myself because it reminded me a trade I got trapped twice in the past. This was the pattern I once got trapped in the past, and now once again, this setup looked much different, because when I was watching this live, this candle actually closed outside of the channel, just like here. And the reason why I don't like taking this failed second entry long is because how strongly prices pushed above EMA, never touched it. And by the time I'm taking a failed second entry long, the move is quite substantial and already a little bit of a big way to push down. It also reminded me of this setup right here that happened a month or 2 months ago. You can see strong push above EMA, quite a decent move down, and a failed second entry long. This was just a fake out, but the second entry short formed quickly after. But this is very nuanced. You need to get trapped on a setup like this multiple times for you to even develop a gut feeling like that. So if you took this trade right here, you follow the rules, and this is a decent failed second entry long, followed by a second entry short, which is where you need to re-enter, because right now EMA keeps holding, new low formed, first entry short, pullback, second entry short. The downtrend needs to get new extreme, and you expect for prices to go all the way from these highs all the way down here. So this is just a little fake out followed by a second entry short, and you can make the money back with a one nice decent runner. Notice, break new low, another new low, and a third leg to a new extreme. So at this point on, once you have multiple legs to a new extreme, you have to reanalyze the structure, and you can see that this move down is way too strong for just this tiny downtrend. And since we have a massive move down already, this is where I'm going to look for possible wider channel. Just going to copy it, put it at the bottom. It fits decently at the bottom. EMA is working together with the trend line, and this is nicely a bearish downtrend working level. Okay, so I'm drawing this wider pattern because we have a break, new low, another new low, and the third leg to new low here, and another push to new low here is indicating that this move down is way too big for this tiny little channel. So once you see so many new legs to new extreme, that's possibly indicating that may be a wider pattern. Since we have a downtrend, the high probability setup is going to be a second entry short at the key entry point. We have new low formed, first entry short, pullback, second entry short. Uptrend played out with the break new high, first leg up, pullback, second leg up. This is a two-legged pullback, and this right here is a second entry short of 2 key entry points, not just one. Two-legged pullback, high probability setup, followed by a break. First leg to a new extreme, pullback, second leg to a new extreme. The two-legged pullback, two prices to create new extreme, and a strong push above EMA. As prices are pushing above EMA, and notice we have a support here that is forming. We have a new high, first entry long, pullback, second entry long, new low, first entry short, pullback, second entry short. Now the structure is quite strong bearish, so we don't want to look for a reversal just yet. I took this trade myself, but the only reason why I took it, because it was also a second entry long. Had this been just a failed second entry short without second entry long, I would not reverse the market this quickly. But since you see support holding, downtrend played out with the two legs to new extreme at the time, strong bullish push above EMA, and you expect new extreme, and you also expect the second leg to follow to new extreme for this bullish trend. So this is a little bit more of aggressive trend because the bias is strong bearish. But notice downtrend played out, indicating time for smaller correction, second entry long, and a failed second entry short, bouncing off to support, barely closing above EMA, decent bullish bar. It was quick enough for a scalp, but market strongly reversed down. At this point on, once you can't even pass the midline of this trend range, strong bearish push down, this is confirming major bearish bias. At this point on, all you're looking for is just short entries, because notice from the very beginning of today's session, strong bearish push down. This was the largest correction, instantly played out, and market keeps pushing lower. So our goal is to find patterns, find channels, and look for high probability setups at key entry points. We have new low formed. I'm going to redraw the channel. We have new low, first entry short, pullback, second entry short. But I cannot take this second entry short just yet. Why? First of all, this uptrend doesn't have new extreme. And this was quite a steep bullish push up, two big bullish bars. Second of all, this downtrend had a break new low, but this was quite small. We definitely have a break here and new extreme here. Now, since this is looking quite bearish, I was also playing and looking for a channel, something like this. I'm going to quickly delete it to make it more visible here. I was looking for a channel like this. You can see it quite fits nicely off of these lows getting confirmed here. And since you're bouncing off the lows of the channel, you can expect stronger correction. For that reason, you cannot take just a second entry short here, okay? You only have a break and new low for this downtrend that we had previously, and you're bouncing off even this trend channel line of the bigger pattern. So you need to have stronger correction at this point on. You cannot be FOMOing and chasing the market. Break, attempt to create new high, small little congestion. We have short setup here, but everything is congested. Notice new high, first entry long. This is lower high, but still inside of the congestion. Pullback, second entry long failure. Notice bias is bearish. Every second entry long is going to be considered a trap, and it's going to be a high probability setup if it forms correctly on the rules at the key entry point, and it's forming at 2 key entry points. It is a breakout pullback because you broke this congestion, you pull back. So this is a breakout pullback of the congestion, and this is also failed second entry long near the key entry point, high probability setup, new high, first entry long, second entry long failure, decent high probability setup. This is the additional way to enter congestion, because once you see a congestion like this, there are two ways to enter. It can either break to the upside and you will fade the breakout with the direction of the main trend, or it can break to the downside and you wait for prices to pull back, because most breakouts will fail. So there's a breakout, it pulled back, tested it, and now it's reversing, giving you information that it is okay to sell. You don't ever want to enter in the middle of congestion because it is too stacked and you can get chopped to pieces. Multiple legs to new extreme, spike, and a channel formation, break of this downtrend. So we expect for prices to create new low, close outside, new extreme for the uptrend, indicating that uptrend played out. Okay, spike, channel, break new extreme, uptrend played out. We're not looking to go long because the main bias was bearish. We have strong push below EMA, new high, first entry long, pullback, second entry long failure. Nice bearish bar, off the channel, confirming the channel inside of it, off the EMA, and this is a failed second entry long, and I took this trade myself and I had a losing trade right here. This was another fake out, very similar to what happened at the top. We had two fake outs today, because notice prices just tick a couple ticks higher and eventually creating the move down for a new low of this downtrend. Now it's a little bit unfortunate. There is a small micro support here that you can pay attention to. With such a nice signal bar right off 2 key entry points, is definitely following the rules. And as a trader, your goal is to execute the rules and they're going to be losing trades. That's 100% certainty. You never trade without a losing trade. So you just brush it off and you follow the rules and you keep executing on the next trade. Now market keeps correcting. We can see break new low form, so we're not looking for shorts. And you can see how prices are starting to stall. The momentum was supposed to be strong, and in fact, notice how you're starting to lose steam here. It's starting to get very slow. You keep pushing lower, so you definitely don't want to be buying, but you don't want to be selling so close to these lows. You can see it keeps pushing lower, but it's not worth it. Now there is a strong push up, and at this point on, you have to redraw the trend range because you have bounces here. This was a massive bullish spike. Also notice this key entry point, this key level, the low of the day, getting confirmed here, getting confirmed here, getting confirmed here, and getting confirmed here as well. So you can see that you can use the key entry point at the start of the day to help you identify where the possible pivot for prices is. It can help you while you're following the short-term channels. So once you're following the short-term channels, you can combine it with the key entry points. Strong push above EMA. I'm drawing the channels tight. Why? Because we are inside of a trend range and the main bias is bearish. This downtrend still needs to get new extreme, remember. So I'm just letting these bullish corrections play out and focusing on selling. Now we have a little bit stack area here. Tempting short right here. But you know, right at the EMA, a little bit of congestion here. You would prefer to get quick little lower high below exponential moving average, confirming these matching highs, but you never got it. Market just strongly reversed all the way down here, indicating that the move has been made and you have to stop looking for shorts. You cannot buy. Why? Because zoom out, you can see you cannot reverse a very strong bias like this. This is way too strong and you cannot be looking for longs under this bearish bias. At this point on the trend range is still not strong enough. Okay, you need to have a stronger pattern for you to go long rather than these bounces. This downtrend needs to get new extreme, break new low. Okay, you have a strong push above EMA, break new high, nothing really happening, push to a new low, strong push above EMA. Okay, so this is now a valid trend range. We've been working this trend range for quite a long time. You can see no high probability setup and this is okay. You need to sit here without forcing a setup that is not truly a high probability. We can see that we have a massive push above EMA, fell breakout and back above the support. This uptrend has overshoot, which means we can break the channel or reverse. Notice first leg down, pullback, second leg down. We have a two-legged pullback, break of this channel, and just like this channel right here, according to rules, needs to get new extreme even right here. So we have two-legged pullback down, support is holding, push above, and we have high-low, confirmation of this two-legged pullback, larger visual two-legged pullback, so we can treat it as a visual first entry long, pullback, second entry long. At the support, pushing above EMA, this is a high-low confirmation setup of the two-legged pullback. Multiple key entry points here, you can see bouncing off the support, and this is an area, this is not a line, so you can move it and tweak it a little bit. And this is a high-low confirmation setup, and you need to create new extremes. So even though we had a very strong bearish bias, this is ultimate confirmation now because there's a very strong push above EMA, two-legged pullback played out, indicating that there's no more bearish momentum, and even this lower high failed, so you want to go long on a high-low. Market created new extreme, first leg up, pullback, second leg up. We can see the resistance is coming into play again. Strong push below EMA, confirming the bearish momentum, and at that point on, the bearish bias may resume. However, you only get horrible second entry short, horrible lower high, too close to these lows, no high probability setup. Now this failed second entry long is very tempting because buyers are going to get trapped buying while this downtrend needs to get new extreme, while below exponential moving average like this. So you can capitalize on a failed second entry long right here. If you took this trade right here, I can mark it as a more aggressive setup because this right here, it's very tempting for buyers to get trapped because now the massive push below EMA confirmed the bearish momentum, second entry short, and a new first entry long, second entry long failure. However, after prices are pushing lower, we need to look for patterns. Always try to locate the smaller patterns. You can see how many confirmations you're getting here and here and here. This is a nicely fitting downtrend. You can see that this was not just a regular trend range and you have a massive push phase down. So this makes you to believe that we may actually have a larger downtrend in play. That this may be just spike, little bit of a correction, and a channel pattern. Larger spike and a channel, and you can see this was the main pattern for the entire day. Well, a market reversed very strongly. Since the bias is down and the short-term pattern is downtrend as well, We look for high probability setups to sell at the key entry point. We're not interested in chasing the market, selling all the way down here because market can reverse any minute. We need to sell at the key entry points where the high probability setups will appear. So we're looking for two-legged pullback. We have new low, first entry short, pullback, second entry short, but it is too far away from EMA. We cannot sell. Notice the correction is much stronger, which means we can adapt to a wider uptrend, and we have a consolidation. After there's a break of the downtrend, you expect for prices to create new extreme. However, lower high is congested and a failed second entry long is congested as well. So we have flat EMA exactly in the middle of these bars, and this is the worst type of congestion. There is no entry in this congestion. You don't want to risk it. However, there are two ways how we can enter congestion. We can either, how we mentioned, fade the breakout to the upside with the direction of the main trend, or we can take additional way to enter congestion, wait for the breakout. Most breakouts will fail, so the breakout will pull back, test the breakout area, and this is a breakout pullback, lower high, additional way to enter congestion, and a confirmation of the key entry point. You're at two key entry points. You need to get new extreme according to trendline rules, and this is a decent bearish bar. So this was a trade that I actually took, quite a decent bearish bar and lower high breakout pullback of this congestion. Market kept pushing lower. Now we have already pushed to a new extreme, but notice what is happening. Prices are correcting for a long time. You have new low, first entry short, second entry short, but you cannot go short. You already have a break, new low. You have another short here, but this is below bullish bar. You cannot go short below this. You have this uptrend in play, and notice what you have. You have very nice bullish reversal bar above EMA. And think about this. This must have trapped a lot of bulls. Of course, you don't want to go long because notice at this point on, you're only looking to sell. This is a pattern, very strong bearish downtrend. So you're only following the rules. You're only redrawing these channels just to stay on the right side of the market so you don't go short too quickly. But this must have lured in a lot of buyers. It ticked higher and instantly reversed down. So this right here, even though it's not easy high probability setup, textbook one according to rules, this is more advanced setup. But advanced trader can recognize how many bulls got trapped, close strongly below EMA, still there are some resistance forming, big bearish bar, so you can take this setup for a quick little scalp, and then market finally created second leg to a new extreme, and we have a little bit of an overshoot of this spike and a channel, so we can generate strong momentum in opposite direction. Now prices are pushing higher slowly, we have a break, new high, but the uptrend keeps continuing. First leg to a new extreme, second leg to a new extreme. However, notice, instead of prices reversing, there is still a residual bullish momentum. So this makes me to believe that the uptrend may be slightly wider. We have push above EMA and new low formed, first entry short, pullback, second entry short failure. So you're not really looking to go long at this point on, you're just letting this correction play out because the main bias is bearish. But as you can see, the market is not reversing. Instead, prices are pushing back above EMA, and you have first entry short, second entry short failure, big bullish bar, EMA holding consistently. So this is the confirmation that the main pattern right now is a wider uptrend, not this tighter one, and this is actually a nice, decent high probability setup. Felt second entry short above EMA, confirming the second entry long, nice bullish bar, good enough for a scalp. The main key entry point came into play, and notice market strongly reversed down, offered you a lower high, but I don't think lower high, it's actually very tempting. This lower high, problem is when you're watching this live, when I was watching this live, I had my channel a little bit higher because I first connected, I first connected first two swings like this. Okay, so you're not quite at the key entry point when you're watching this live. You're only able to drag it here once you confirm here and getting a confirmation here, so you can easily put the pieces together and find a channel. You can have a little tiny little break like this for such a massive channel. It may not even be such a big deal, but this one fits a little better. You won't have the perfect downtrend most likely, so for that reason this lower high is a little bit more aggressive. If you had the perfect downtrend here, this is definitely a decent setup at that point on, because uptrend played out, push below EMA, confirming the bearish momentum. Unfortunately, felt second entry long is way too far down, far away from EMA, and no way to enter. New downtrend has started. Notice how prices are fitting nicely. Micro double bottom, resets the count. First entry short, pullback, second entry short, break of this downtrend. So we need to get new extreme and we have first entry short, second entry short, off the exponential moving average, take the high, reverse down, decent bearish bar, the high probability setup, and the market created new extreme. After that, you have a consolidation. You're not looking to go long and you're not looking to go short, because you would expect for prices to continue pushing all the way down. It's not happening. You're pushing above EMA. You don't want to go long. Main bias is bearish. So this is an area you guys can see EMA in all these bars. You just wait. Uptrend working higher, followed by a breakout above this trend range. Most breakouts will fail. If you at this point identify the channel, this is a failed breakout out of the congestion at the main key entry point. So this is a decent setup, more advanced, because you need to have the channel. If you don't have the channel here, you cannot go short here, because you're basically guessing. Only if you get proven channel here, which at this point on you can see there is some form of a channel, because you have a push phase here, correction phase, push phase here, correction phase, push phase here, and the goal is always to sell at the highs during the end of a correction phase. You don't want to be chasing the market all the way down here when the push phase is changing. So you need to identify the pattern quickly. If you don't have the pattern, you'll be guessing. Strong move down, break new low, push above EMA, no real good setup. You have a lower high here, but it's not confirming much. Not the best entry. Felt second entry long is all the way down here. Then you have a bunch of congestion. There's pretty much no setup. You're at the lows of this channel, so you expect for push phase to end, but you cannot buy, you cannot reverse this strong market. Everything is too close to these lows. Everything is too congested. Last push down, and we have strong reversal up. You can see the push phase has ended at the bottom of this channel, and the market is reversing. You have a visual of first leg, second leg down, but second entry long trigger below EMA, move to a new extreme. You can see new high, first entry long, second entry long, and at this point on, it's already getting too late. Even though we have a decent price session, you can see the market is closing, and you never want to be trading this late, especially on a Friday. On a day like this, it is really important to follow the main bias. You can only go long after you have a solid confirmation. You can see only long I marked is this high low, and it's specifically because there's a big push above EMA, strong bullish push up, failed breakout, two-legged pullback played out, and the support keeps holding and the EMA keeps holding. So it's a decent confirmation. Other than that, this is just a correction, temporary phase, because the main bias is bearish and the downtrend kept resuming. You can literally see that you want to sell at the key entry points, at the highs. You don't want to be chasing the market all the way down here. You always want to wait for prices to come to you, to your key entry point, because that's where the pullback begins and the strong momentum is beginning.